So today's presentation is about, or rather, is the definition of an accredited investor and why that matters to some, if not everybody, who hears that term. I understand, Cheryl, and correct me where I'm wrong, is an accredited investor is somebody who meets one of two tests. There's an income test and then there's a net worth test. And the income
Well, there's
test
other
looks.
criteria too, but most people don't, it doesn't apply to.
Oh yeah, that's right. If you don't meet the first two, you may meet the others, but let's discuss what the first two are. The first one's an income test. So in order to meet the definition of or the certification of an accredited investor, you need to have annual income of at least $200,000 for the last 2 years, with the expectation of having the same this year if you're single. And if you're married, it's 300,000 for the last 2 years with the expectation of the same for this year as well. And if you don't meet the income test, you can meet it by a second test, having a net worth of $1 million or more, but that net worth does not include the value of your home.
Some pretty straightforward and basic criteria. And now there are some other times when people would qualify if they're in the industry of dealing with the securities or investments. So there's other ways of becoming or being classified as an accredited investor. But for the purposes of what we're talking about here, we wanted clients to know when we're starting to talk about some of these new investment opportunities in the perspective of hoping to get tax benefits from them.
Well, maybe,
What's that?
maybe. I mean,
Maybe.
what you're really talking about is the alternative investments,
Right.
right?
Yeah. Alternative investments. Now, and the reason they want people, why is this important? Why is it important to be an accredited investor in some of these investments? Well, because some might be a little more speculative, which means they're a little more risky. So they want to make sure people aren't getting taken advantage of. They want to make sure that people have the means to participate in the investments. They also, they don't want to have everybody's eggs in one basket, I guess.
The purpose of knowing what an accredited investor is for the individual who's interested in investing in these alternative investments. And then when you try and find a definition of what an alternative investment is, it's really anything that's separate from stocks, bonds, mutual funds, anything that you would typically go to your traditional investment advisor, or if you wanted to buy on E-Trade or TD Ameritrade or Charles Schwab, those would be your traditional investments. The alternative investments are really the things that Cheryl and I are discussing more this year. Things like working interest in oil and gas, things like investing in solar investment tax credits. Thank you. So those are different types of investments that you can't buy online yourself through an E-Trade or Robinhood or something like that. I think actually, I think even like Bitcoin meets the definition of an alternative investment. Real estate would be an alternative investment.
But you don't have
Art,
to be accredited investors to do all of those. Anybody can buy
sure,
Bitcoin. Not everybody
right.
should buy Bitcoin.
Yes, but I was just trying to come up with other examples of what alternative investments were.
Yeah, yeah.
Certain times when you're investing in something, there is a requirement that you are an accredited investor. And I guess not that you tried to stump me, Cheryl, but so I bring up Bitcoin and you're like, well, that's, you don't need to be an accredited investor for Bitcoin. Sure, you don't. But the thing about Bitcoin is it's very liquid, right? You can be in, you can be out, and you're okay,
Right, right.
other than the fluctuation of what the market may have done at that moment.
Yeah.
These alternative investments where being an accredited investor is important to
Is a
distinguish from
requirement
others is
sometimes.
it's a requirement. And why is it required? Because you may be in a situation where once the money's invested, it becomes extremely illiquid, meaning you cannot get it back out. You are now stuck with that investment for a period of time. If you wanted to invest $100,000 in the S&P 500, you can be in the morning and out at the end of the day. You can be in on Monday and out on Friday. Whatever drives you to do that, you can do. When you look at some of these alternative investment options, you may be in, and then you're dependent upon the promoter on when the exit occurs. And Cheryl, I'll ask you if you have an idea from your perspective, why is that important when this concept of accredited investor comes up?
What, the timeline?
Yeah, just to know that you lose kind of control of your money. And why is it important to understand that in the context of being an accredited investor? I guess what I'm trying to get at is,
I'm like, which direction do you want me to go with this?
yeah, it's like the reality is you know that you can forego control of $100,000 for a 5-year period.
Yeah,
If this
I
is
mean,
the only $100,000 you have,
yeah,
but
they don't want, because these investments can be risky. There's, obviously there's no guarantees in any investment, even though some people may try to say there are guarantees in the investment. But it's really, this is a way that they've tried to protect people and to make sure that really people who are getting into these have a little bit of a background in it, have a little bit more resources, and isn't going to put the people who are investing in this in any kind of financial hardship.
find, yeah,
And that's, I mean, it still could, but
right.
they're, it's just trying to identify some criteria to protect investors.
Yeah. And as we continue this journey over this 2025 year about alternative investments that may also have some interesting tax elements or tax attributes associated with them, we just want to be mindful of folks, for folks, that if there are interested in doing anything of this sort, it is really important to realize that these investments are extremely illiquid. And the likelihood is once that money is placed into one of these opportunities, you have to recognize that you will likely live the next 5 years without this money. Now, that may also mean you're getting nice returns, and you should expect those over a 5-year period, but you may not be able to extract that money in a
Yeah.
year from now. So even if you just make the criteria based on income alone, I don't think I'd ever suggest to somebody that the first thing they would do is take their first $100,000 and invest in something like oil and gas. This would be part of a bigger portfolio.
Part of a bigger
And,
strategy. There should be a purpose for this. This should not
right,
be, hey, I have $100,000. What should I do with it? Let's put it in an oil and gas investment. Probably not the
right,
ideal. It's you kind of have to look at the whole structure of what's happening in your investments and in your finances to see, does this make sense? There may be other ways. If you have $100,000, there's a lot of ways to deploy that capital. This
right,
is one strategy that has specific purposes, but this, we're not talking about oil and gas necessarily, or the solar investment tax credits. We're talking about why it's important, why there are some criteria before you can get into this, and why it's important. And in any investment that you're doing, you should do due diligence. You should really understand. If you do not understand something that you're trying, I mean, I don't expect you to fully understand how oil and gas works and how solar works and all of that stuff, but really understanding the finances around the things that you're investing in, that's really important to do your own due diligence. I mean, we could
right,
tell you it's a great investment, or somebody else could tell you it's a great investment. We can tell you from the tax perspective, we can tell you some of the benefits of this type of investment or this type of, how the credits will work for you. But it's not going to work for everybody. And it's not something that everybody should consider. So as in everything else that we say, it depends. And it's important to make sure that you think about, the benefits, the risks, and the timeline, and if it works within your greater financial plan.
excellent points. And I think that's another part of being an accredited investor, is being a knowledgeable investor.
Yeah. Yeah.
And those last 3 points you made are really what goes to being knowledgeable. But with that, let's go ahead and wrap this up. I think that we kind of get the point across here. And if, as we move forward, if you have any more questions about what it means and how we can help with that, we'd love to talk to you more. Thanks, everybody.